We meet again. For this lecture, we will continue with the audit evidence, where we are talking about the quality and adequacy of audit evidence. There are many determinants of persuasiveness of evidence. That means how persuasive evidence to the auditor in terms of its appropriateness as well as sufficiency. Now, under appropriateness, we have to look at how reliable is our evidence. Is it relevant to the audit that we are performing? We have to look at the independence of the provider. Here it means provider of the information to us. How effective is the ICS, internal control system of the client's company. Auditor's direct knowledge. Qualifications of the individuals providing the information. Can we rely on the information given by them? Degree of objectivity and as well as timeliness. Besides how appropriate is the audit evidence, we also have to look at how sufficient it is. Okay, let us move on to the next slide. Okay, the first determinant is reliable. Here we are looking at the credibility of the evidence, and this is very much influenced by its nature and its source. So usually, in terms of reliability, it will be high if the auditor has direct knowledge about it. But it's on the level would be medium if we depends whether it's from external or internal source. That means does the source of, for example, documentation come from the third party, for example, bank statement, or internal source. That means the records prepared by the client themselves. We consider the level to be low, to be having a low reliability if we need to substantiate the evidence that we have gathered with another source. If we think that the evidence that we have is not enough, then we have to gather or to substantiate it with another form of evidence. Another determinant of audit evidence is relevant. So we want to see whether the evidence relates to the specific objectives that we want to test. For example, to check on the completeness objective for recording sales transactions. So the evidence would be the numerical, for example, numerical sequence of pre-numbered shipping documents, or maybe we're looking at the invoices. So we have to look at the numbering in order to see whether those the transactions has been completed. Another determinant would be timeliness. Here we are looking at when the document is being accumulated, or the period covered by the audit. Usually for balance sheet items, it is more persuasive if it is close to the date of the balance sheet, but for profit and loss account, it is considered as more persuasive, the evidence, if there is a sample from the entire period under audit. So what we mean here is that, let's say if you are looking at the balance sheet items, cash at bank, so we wanted to look at towards the year end. For example, if 31st December 2019, so we need to get the bank statement as of that date. In comparison to the profit and loss item, where the transaction occurs throughout the year, so we have to gather evidence for every month in order to cover the whole period and make it samples to represent the whole population, to the whole transaction happen throughout the year. Okay, besides appropriateness, as I mentioned earlier, we are also looking at whether the evidence that we have gathered is actually sufficient. So we are looking at the quantity aspect of the audit evidence. So what we have to consider is, in gathering the audit evidence, is to consider whether the internal control system of the client company is effective, the nature of the audit evidence, the risk involved and the materiality aspect, the quality of the audit evidence, as well as our experience and knowledge of the business and the industry. So if we are knowledgeable of the industry, maybe we know what kind of information that we need to gather, and we will not going to waste our time getting so many evidence, but actually we can select certain evidence and that could be justifiable for certain transaction. Having talked about audit evidence, now we will look at the audit procedure. How are we going to go about the audit in order to satisfy ourselves? So basically, we use audit procedures to collect the evidence. So we can say that audit procedures are specific acts or action performed by us to gather the evidence in order to determine or to satisfy the specific audit objective. Okay, for example here, when we went to examine, we are looking at the documentation. Scan is a form of analytical procedures. We read the documentation. We compute again analytical procedures. We compute, usually reperformance, we will recalculate the amount given to us in order, that would mean to reperformance. Footing here is just, if you have the textbook, you can see that it shows that if we have a certain balance, so we can actually do the footing. The footing, that means we do the calculation from the top to the end of the, let's say, balance sheet, trial balance, that means we can recalculate. We also have trace. Trace, we have to reperformance, that means we have to redo the whole process, looking at the documentation. We compare, again look at the documentation. We count, physical documentation, that means, let's say, stock count, we have to physically do the stock take, and by looking at the documentation as well. We observe how the client perform their duty, inquiries of the client, that is what we are going to do. And vouch is also a part of documentation checking. Now, I would like to, the previous slide, we have talked about tracing and vouching. These will be two words which are always being mentioned when we perform the audit. So what do we mean by tracing and what do we mean by vouching? If someone asks you to do tracing, that means you will trace from the source document up to the ledger or to the journal. That means from the source document, how are we going to record this? So we are going to trace the complete, in order to satisfy the completeness assertion. But if we are doing the vouching, we look at the ledger or journal, then we are trying to vouch to the source document. So we are working backwards. So in this case, in vouching, we are trying to satisfy the assertion of validity as opposed to tracing. Tracing, we are trying to meet the audit objective in order to satisfy the assertion of completeness. Okay, it is just the other way around. So these are the types of tests in the financial statement audit. We have discussed this in previous class. We talk about test of control. When we talk about test of control, basically procedures to evaluate the effectiveness of the internal control system of the client. And then we have substantive test of transaction, looking at the monetary amount. We are going to recalculate, for example. So we are trying to detect whether there's any error or fraud. Then we have analytical procedures, looking at the comparisons and relationship to assess whether the account balances or other data appear reasonable. Then we have the test of account balances, looking at the details of the amount in the account balances to see whether the balance related to the objective have been satisfied. Okay, you don't have to worry at this stage. It is normal that when you are learning audit, before you go for your practical training, you just have to imagine how does this work. But once you go for your practical training, you have better idea what I'm talking about because you have the hands-on experience. Okay, this is basically the summary on the reliability of audit evidence from type of audit procedures. So basically, we have a high reliability when it comes to physical examination and observation. We are saying this because in doing the physical examination and observation, we have to perform it ourselves. So the auditor have the first-hand experience. So we can rely because we have to perform it ourselves. But when it comes to documentation inspection, confirmation, or analytical procedures, we consider that as having medium level of reliability. And a much lower level of reliability concerns us when it involves inquiries of the client, personnel, or management. So we can say here that most of the time we would prefer to have high level of reliability, which is the physical examination and observation. Okay, moving on, we are going to look at the audit documentation. So basically, when we perform the audit, we have to record all our works in audit working paper. So this is where we will keep all the principal records of the auditing procedures applied, whatever evidence obtained, and our conclusion that we have reached. Under Auditing Standard 230, working papers should record the auditor's planning, the nature, timing, and extent of the auditing procedures performed. So basically, everything that we have performed need to be put in audit working paper. Audit working paper is very important because it assists us in providing assurance that adequate audit was conducted, provide the basis for planning. In fact, it's actually, besides becoming the reference for future audit, it's actually also evidence. It becomes evidence the work that we have performed. There are two types of working paper, permanent file and current file. Permanent file contain data of historical or continuing nature, while current files include all audit documentation only applicable to the current year under audit. Now, under permanent files, it could be memorandum and articles of association, chart of account, organizational chart, accounting manuals, copies of any important contracts which belongs to the client, documentation of internal control, prior years analytical procedure or terms of debenture or bond issues, whatever relates to the client's accounts. Okay, but when we talk about current files, so we are looking at the current year period copy of financial statement, whatever audit plan and audit programs that we have, any working trial balance, adjusting or reclassification of journal entries, or any other working paper supporting the financial statement amount. So this is an example of working paper, where in a working paper we might have audit plans, audit programs. Audit program is simple list of audit procedures that we have conducted. Then we have working trial balance, account analysis and listing, audit memorandum, as well as the adjusting and reclassification entries. Now, for those who have the textbook or the ebook that I have uploaded, please do so look at the example in order to have better understanding. Now, in terms of control and rights, audit documentation prepared by us belongs to us, and the client has no right to possess those documents unless if ruled by court. Remember, we have done this under confidentiality. Again, we should not use the client information for our personal advantage, and we also have no right to disclose their information.